Hey guys, Dan Harker with the Empower Home Team at Keller Williams Realty. Tom Sherman, Benchmark Mortgage.
Hey guys.
We sit down once a month and we talk about what's going on with mortgages, what kind of impact this is having with buyers. Well, we've had a lot of changes that have happened just recently. Loud car noise behind us. Inflation rate has gone up.
Yeah.
How is this going to have an impact for the buyer who's wanting to buy a home out there? What is this going to do to them right now?
Yeah, the key word right now is volatility. I think everybody's trying to answer the question, what's going to happen with interest rates? What we know is that the CPI index came out higher than it was the month before, which was the highest it's been in 20 plus years. And so we know that inflation is definitely on the rise. And anytime that occurs, the government is going to do what they can to slow it down. The only way they can do that, or one of the main ways they can do that, is by raising the federal funds rate, which is the cost of borrowing money from the federal government. Mm-hmm. What that does is it increases the cost of credit cards, car payments, personal loans, etc., which has the effect of slowing down the economy. And we're going to see that here, I would imagine, in the next coming months. But because of the fact that the CPI came in so much higher, it's giving a lot of value and credence to the thought that we're going to have higher inflation in the future. Whenever that occurs, mortgage rates are going to go up, and you're going to see interest rates increase. What's happened over the last several months is just that volatility figure again.
Yeah.
It's going up, it's going down, it's going up, it's going down, but the general trend right now is going up. Now, what we're anticipating is that as the government raises the federal funds rate, we anticipate the economy will slow down, and hopefully we'll get some mortgage relief in the coming months as well.
So, you had made a comment back in January, not too long ago, that if someone bought a $500,000 home back in January, 3.5% at the time.
Correct.
And that same $500,000 home that you bought today, with where rates are, what has changed in the monthly payment for that buyer if they bought today versus then?
Yeah, you're up several $100s since then. And you couple that with the fact that the home prices have gone up about 9% since the beginning of the year.
Yeah. That
cost, it's obviously more expensive to buy that home today.
So if someone wanted to wait, is it, we have people sitting on the fence right now going, maybe I'll wait until it comes back down.
Yeah, so I tell people that there's nothing indicating that it's coming back down right now.
Yeah.
Home prices, they anticipate that the rate of appreciation will slow, but that doesn't mean it's going to decrease.
Yeah.
And so, number one, I tell people that you cannot outsave appreciation.
Yeah.
What I mean by that, if a home is $500,000 and it's appreciating at 5% a year, that's $25,000 a year. And so unless you can outsave that appreciation, you should buy now. The second thing that's important is that you cannot out-earn an increase in the interest rate. So as interest rates are going up, the amount of money that you earn every month isn't going to go up fast enough in most cases to cover the increase in the interest rate that you might be paying. So one of the things that we tell people right now is marry the house and date the rate. And what I mean by that is, find the house that you want. Yes, it's gonna probably be a little bit more expensive than it was a year ago, but once you get that house, you're dating the rate. And what I mean by that is that rate is not going to be fixed. As the market shifts and the rates come back down, you're most likely going to refinance that rate. We anticipate that that's going to happen in the next 2 to 3 years.
Okay. So in other words, if I hear you correctly, you marry the house, you can always go back in and refinance when there's
exactly right. You marry the house and then refinance the rate.
Okay. So I know there's kind of a rule of thumb that every quarter point, half point, it goes up. How does that change the payment on a house? Is there kind of a rule of thumb you go by?
No, because it varies on the loan amount.
Okay. All right. Well, awesome. Well, hey, always good information, and he's always first class, and always want to help out. And you can reach Tom at Benchmark Mortgage. I'm Dan Hark with Empower Homes, and always happy to help you guys. And hope you have a beautiful day like this one behind us. We'll talk soon.
Thanks, guys.
Bye-bye.